I think to some extent that blue wave notion being dissipated now is reflected in the markets. A couple of moves that we've seen clearly that reflation trade that was supported by blue wave, more spending, has reversed to some extent. So you noted the treasury yields earlier. We see the 10-year go from 94.95 on election night now down to the 76 level. So nearly a 20 basis point reversal in yields as that, hope for blue wave and hope for more spending now actually becomes less and less of a probability. Secondly, we've seen this rotation over the last 2 or 3 days in particular out of that cyclical value trade into technology. And so again, technology, a sector that does do better in lower yield environments, but also perhaps reflecting maybe a better tax environment going forward now that we don't have a blue wave scenario on the table. And of course, that blue wave was highly supportive of the cyclical trade as well. And so a little bit is being reflected. The other point I would note that is being reflected as well is that the likelihood is becoming higher and higher that we see a Biden victory, but also a split Congress. And so, in that scenario where there is some gridlock, perhaps the policy you get is Biden light. So you won't get the full, $4 trillion in tax hikes. In fact, you may not get any if he has trouble passing that through Congress. And then the $7 trillion in spending that he had proposed may also be scaled back. Keep in mind there were some policies that both sides of the aisle liked, like infrastructure. So maybe you get a piece of that. But areas like clean energy, like some of his healthcare policies, and maybe even some of the regulation policies, maybe get scaled back in a Biden light scenario. So all in all, historically, markets like this, when there is a president on one side, Congress on the other side, or a split Congress that's providing some checks and balances. And that's certainly what's being reflected in markets over the last couple of days, at least.
Yeah, and we've seen the markets live with the split Congress all through this year, through this 40% plus rally that the market staged from the pandemic lows. But I do want to get your sense, Mona, on what the market is expecting from the Fed next. Because yesterday, in the policy statement, Fed Chair Jay Powell highlighted that monetary policy has not run out of ammunition, and that should not be the expectation. Do you think that they will pitch in, and that's giving a facelift to the markets as well?
You know what? Certainly, Jerome Powell has been one of the heroes of this crisis. He has said he's ready and willing to pitch in. And not only has he brought rates back to the lower bound, we've seen the Fed do tremendous QE purchases, also add these credit facilities that have really supported the functioning of credit markets. So they have done well above and beyond what we've seen in any other crisis. That being said, it does look like they'd like to pass the baton over to fiscal. Jerome Powell himself keeps reiterating that Congress should come together, put a fiscal stimulus package together. It is needed. There is no number that could be big enough or too big, in his words. I do think he talks about there is more ammunition in their toolbox as well. At some point, if they need to implement tools like additional QE or some sort of yield curve control, those could be tools as well that they utilize. But I think for now, they're really hopeful that we do get this baton passed to fiscal, especially if we do get maybe a more friendly environment policy-wise in the next few months.